Hello, everyone. Welcome to today's session. Let's get underway here. I've got buy-sell ratio here on the chart to start out with. We'll take a look at direction alerts here. Also, relatively, still have a positive buy-sell ratio, which is just slightly above 1. Let's take a look here at 1.26. And so still just that slight bullish edge. Not by a whole lot. Essentially, anytime the buy-sell ratio is greater than 1, then you know that this green line is above the red line, and overall that just has a bearish breadth to it. There's more stocks in uptrends than there are in downtrends, and you can see that after we had this real big run up, lots of stocks participating here because lots of stocks were not participating here. Lots of stocks in that downtrend, once they started to shift and started to move back up, now we had the second half of this rally. We just haven't had a lot of participation. Part of that is because there are sectors that are weakening, and the overall breadth of the market starting to get tired, meaning that just not as much participation. We talked about this over and over and over again for the last month or two, just because the S&P 500 it's a weighted average essentially, and so you end up with let me find it here and here, SPY. You end up with a heavier weighting towards larger stocks, and so I think I had read that about 30% of the S&P 500's price movement, is from like the top 10 stocks. So it's very heavily weighted towards the largest moving stocks. So it's and obviously those are the ones that are moving, like your Facebooks, your Microsofts, your Googles, and now Nvidia. And there's no question that technology is leading the pack right here, and that's still the overall perspective. So it's nice to have a couple different perspectives. S&P 500, we kind of forget what S&P 500 is sometimes, and we forget what the Dow Jones Industrial Average is, because we just get so used to looking at the chart and looking at SPY, and it's just it's 500 stocks. It's the average price of 500 stocks. Granted, it's not an even average. Okay, it's a weighted average towards market cap, but it is still an average. It's still an average of groups of stocks. So really, when we're focused, we're primarily focused on stock picking, and irregardless of what the market conditions are doing, it's going to work better. Price activity is going to work better when there's a lot of excitement, and there's a lot of demand, and there's a lot of money that's out there pushing towards certain sectors and certain ideas, and if there's a hot theme that's kind of happening at the time, whether right now it's AI. 2 years ago, because of COVID, it was medical and vaccines, and after that, after the stimulus checks and everyone had money, it was everything else. Stocks were just going higher because there was just so much money in the system. Now the Fed's raised interest rates, kind of slowed that down. It's trying to slow inflation, and equity prices are going to do what equity prices do. There's always going to be stocks and companies that are doing well, and so ultimately that's what we're trying to focus on, is these stocks that are continuing to work, these stocks that are in overall uptrends. But market conditions certainly play a factor, and in that overall trend. So we're currently sitting right at the top of that S&P 500 trend. It's been the last 2 or 3 months, it's been relatively orderly. Anytime we get kind of a pullback, it's been a buying opportunity, and that continues to be the trend until it stops working. So we'll continue to trust that overall trend direction, and remember that it's just allocation size. How big of a percentage are you taking? How much cash are you having? Are you allocating? What of your total assets are you allocating towards equities? And make sure you just have that number really locked in so that you're comfortable with your risk levels, because we know stocks they are notoriously volatile. They're designed to do that because it's a marketplace. It is a market where buyers and sellers are coming together to try and decide real-time value of underlying assets. And for example, let's say, let's look at, let's see if we've got a good example. There are a few good examples, but let's just take, I wanted to take one that we would all know. Let's take NVIDIA, for example. That's a good example. So here's the NVIDIA chart moving higher over this last year and a half. Now, one of the hard parts of trading and investing is we're trying to, you know, anticipate the future. We're not necessarily trying to predict the future, but we're looking for a future event, and that is if I buy this stock right now, I want, you know, I'm expecting it to go higher. That's my expectation versus lower. I'm not going to buy it if I think it's going to go lower. So, but the problem becomes this bar right here when we have to say, well, is now the time to buy it? Well, I don't know. You know, it's gone up, it's gone way higher. Maybe I don't buy it. Maybe it's sitting right here in this upper range. It's already had a big run. Maybe I've missed the boat. Okay, so all of these questions and all of these things start to come into our heads that either talk us out of a trade or get us into a trade at the wrong time. And really that's not my point. My point is that stocks in the marketplace of stocks is everyone deciding what the current value of NVIDIA is. Obviously, there is a intrinsic value. There is a real value of the entity itself, and that is, you know, that, and those are determined by all kinds of different metrics: book value, price to earnings ratios. But ultimately, what the stock price is the stock price is the real time. It's the current value. It's the present value of the future earnings of a company. And I've mentioned this before, it's why I like stocks, because it's essentially trying to find valuation, real-time valuation on a living, breathing entity. This is an entity that creates something out of nothing. Okay, it brings dollars in, it produces a product, and it spits profits out the other side. That's what companies are designed to do. And you know, and if it doesn't happen, the stock price goes down. Okay, the company has to be working, and so we oftentimes are ahead of the game a little bit here when we already have an upward sloping trend, because the consensus is an upward sloping trend, especially when you have a stock that is, you know, it's trading 50 million shares a day, and it's almost a $2 trillion company. Okay, that is a trend that's not moving. Okay, but these 50 million shares that are trading each day, at some point they're going to decide, oops, never mind, let's go this way now. And that could be because of some underlying reason. Oftentimes we talk about earnings reports. Well, what the earnings report does is it reveals the inside information. We don't know. We're not insiders, and so we don't know what's actually happening inside the company until we get that earnings report. So that's why you see, you know, there's a lot of excitement around an earnings report, because they're like, oh, we sold XYZ number of units, we made XYZ in revenue, we made XYZ in profits. Well, the market can kind of guess, kind of anticipate, just because publicly traded companies, they have to provide so much information, a certain amount of information, I should say, so that we as consumers can make an educated decision based on that information. Well, that's my determination of what that information looks like is going to be different than what yours looks like, and times that by 10,000, times that by 50 million, okay, right here, because that is there's not 50 million people, but 50 million shares. That's still a lot of institutions, a lot of groups, a lot of people that have decided that this is the consensus. Any kind of a pullback here, more earnings, saying, good grief, this thing is making a gazillion dollars a quarter, and let's just keep it going. Okay, at some point that's going to shift. At some point, the earnings that come out, they're going to say, we're slowing a little bit. This quarter, you know, they said the entire S&P 500 basically is buying their products right now, hand over fist, and so they're just selling a lot of product, making a boatload of money. That's not going to last forever, but it has, you know, it's got a pretty nice price trend on it so far. So this is a part of understanding what we're doing is we're dealing with it. We're dealing with an average. Okay, we're dealing with this kind of a trend on a stock chart, and because we're dealing with market conditions, that means we have buyers and sellers who have a lot of different incentives. Their incentives are all over the place. Okay, it could be I want to, I'm buying this stock for a fund. I'm buying this stock for my own portfolio. I'm buying this stock because of AI. I'm buying this stock because of gaming. I'm buying this stock because I've heard it. I've heard its name. I buy the stock because my Uncle Fred said to. Like whatever the reason why we're buying something, we've just got to understand why these prices move the way they do. And this always has to be the story of a stock. It has to be increasing. It has to be growing. It has to have sales. It's got to be moving higher. If we find a company like that, the stock price is most of the time going to look like this. And when the market is pricing this to perfection, saying, oh, it grew X amount this last quarter, if it doesn't grow that plus some this next quarter, it's probably slowing down. So then you start to get these reasons why, oh, then the stock price might turn. So essentially what we're doing is we're trying to take all of that decision making of all of these 50 million shares, and we're trying to say, what direction is it going? Number one. Number two, where should I be buying into this overall trend? And so it can be Nvidia, it could be Microsoft, it could be you name it. But ultimately, these stocks that are moving higher, there's always going to be stocks like this, even in a downturn, even in a bear market. Maybe it's oil, or maybe it's consumer discretionary, or consumer staples, or stocks like Campbell Soup and Procter and Gamble, and those kind of stocks are also going to be continuing to chug along. So the general premise is that we're always looking for stocks that are trending higher for whatever the reason, and it's almost always because the company is doing well, or the company is growing, or the company is perceived to be doing well or growing. Okay, because remember, we're making our decisions off of perception. We're buying based on, man, is AI over? Are chip companies going to stop buying chips in the next 5 years? Right now, they're buying a lot of chips, and so that is kind of artificially inflating the stock, because it's this massive pent up demand that everybody is running to this one location. That's not going to last forever, but right now it is. So that overall uptrend is continuing to move higher. This that's just kind of a side note there, I guess. Just wanted to just a little reminder of what we're doing and why we're doing this. It's overall to make money, and it's to preserve our capital and grow it better than any other format in a lot of ways. For example, in what other marketplace could you have a situation like VKTX today? Look at that, 285%. It just went berserk off of it's a medical drug. They're involved in this new weight loss thing. These shots. I don't understand it entirely, but I know it's really effective and working really well for a lot of people. And so they were able to get some kind of approval. I haven't looked that closely, but we didn't have to know that. Okay, we didn't have to know what they were doing. And sometimes a little bit of luck works out on our side as well. But overall, in terms of price activity, okay, I think we bought the stock right here, back here around 20, confirmation bar. It's moving higher. It's volatile. It's bouncing around. It entered into, met all of our criteria. Do we know what the future is? Do we know why the stock is going to potentially have a big up day? Potentially, right? If we've done enough homework on this stock and said, oh, I can see why, but I also understand that could have been denied, or the claims of the drug could have been bad. Like I say, I don't know all the details, but whatever the story is, it's working. So here's our confirmation bar. We're continuing to trend higher. We're adjusting our stop losses. It's continuing to move higher. We don't know necessarily have to know. Again, it's in the biotech. By the time we're into this trade, we could have done a little bit more homework by now, but now we're at $27 and we're thinking, man, this thing's gone a long ways. Would you take profits right here? Okay, because you have a nice uptrend. Would you say, it's just moving, look where it is based on the chart? And remember I don't know what it is, but we as human beings we don't want to buy something that is here. We want to try and buy something that's here, and that's ideal, but we don't want to be buying something that's in this downtrend. We want to wait for it to shift, And now every one of these uptrends, we're continuing to buy. Now this is in that overall uptrend. It's continuing to move. We get another couple of days. It's breaking out. Another couple of days. It's just continuing to move higher. Couple of pauses here. It's moving higher. It's 5, 6, 7 topping tail bars, and you just when you think it's it's gone high enough, it's at 38, and now it's hitting $84 today. And who knows, like who knows what tomorrow could bring? Who knows what the next day could bring? In this case, as far as management, we sold half the position, okay, because half the position takes me back to my allocation amount. Okay, so I had 130 shares. I actually sold more than half. So what that does though is now it's taking me back to, if I can find it, one of these right here. So now we're at 2% allocation, a little bit less, but that had bumped up to 5 or 6%. So now we can trim the shares back. So we still own shares to be able to do that. Now we've moved a portion of those gains. I call them harvesting gains, or it's just realizing your gain, realizing your capital gain by selling something and making an additional decision. So the gains we have here, when we have those gains, we move them back to cash. But now we still own 35 shares. Who knows what's going to happen? Maybe it goes, maybe it has a massive rally. Maybe you get a whole bunch of day traders that are now, interested as well, and it just continues to pump the stock. At some point, this is where it starts to get a little heady to be like, man, this thing's gone straight up. When should I sell? Well, our strategy now is, well, we've made some gains and we've captured those gains and we've moved those gains back to cash. Now we can do something else with those gains. We can spend them, we can reinvest them, we can leave them in cash, and we still have a decent position for more if it continues to go. And I've seen this happen on these kind of stocks where, we'll be looking at this in 4 or 5 months and 78 will look low because it will have rallied to 250 over the next 6 months. Or it could reverse and give it all back and move all the way back to 40. Okay, so we've captured enough gains now to prevent against that scenario. We're essentially playing with the house's money. All of the gains that we earned are now essentially just our current holdings. Okay, so we move that money back to cash. That's how I prefer to manage the portfolio, just because it takes anything I can do to remove emotion out of this process is helpful for me. I'm a very emotional person, as we all are as human beings dealing with money. It's an emotional scenario, and having wins affects us. We have a big win and it's like, gosh, finally, or man, okay, now what? What should I do? Should I sell it, or should I buy more, or should I what? We want to have a plan in place. So in terms of that plan for us and our methodology, we're utilizing a rebalancing approach so that any of these little pie slices get way above 2.5%, because that's kind of our benchmark. 2.5% holding size. When we have big winners and they rally up and they get to a position that's out of balance, we're just going to rebalance it. So we're not saying we're going to sell it at a target. We're not saying we're going to capture it when it does hit 100%. It is rebalancing based on the overall perspective, so that it's just what we do. Okay, we don't have to get super hyped up about it. We don't have to become emotional. Yes, these are great, but it's like, after the 2 weeks we had prior where we got stopped out of 2 or 3 or 4 trades, these are nice to have. And when we get some that are moving and ultimately growing this portfolio account, that's what we want. This is since September 1st. So really in the last 6 months, up 36%. Yes, the market's done fantastic. And this is what I would expect to do in a market like this, is to have, 20, 30% over time. This is 6 months. We'll see what the next 6 months bring. If we can do another 30%, if it flattens out, if it gets volatile right here. But that's kind of just the approach to be able to follow. Now, let's jump back. So some of the muscle stock groups, remember to pay attention to the themes. I'll usually point those out when we start to see those, but the theme that's been happening in the last 6 months, I shouldn't say 6 months, the last 6 weeks, to really 3 weeks, are medical bio. Before that, it was crypto miners. But now these crypto miners, all of these, WULF is a miner, IREN's a miner, MARA is a miner, RIOT is a miner, and they all have very similar patterns. They're all pulling back a little bit today, but I wanted to, let me go to, so the reason why these miners are all moving is because of this chart right here. Is it this one? Oh, great. I'm already logged out. Hang on one second here and let me. See. I had to change my. We'll do that again. But it's Bitcoin. Bitcoin is crossing 55,000, and a lot of these stocks, Bitcoin has been as high as what, 70, 80,000. These stocks were over $100 when Bitcoin was at 60, 80,000 last time. So there could be just a huge amount of pent up momentum. They're unbelievably volatile. Certainly be careful around these, but they're starting to move, and that's kind of the theme right here of some of these new buys. And as we start to see those, and we're seeing some happen in various sectors, that we want to be able to analyze those and look a little bit closer, dig a little bit deeper, decide which stock is going to be the one that we're focused on for that trade. So in this case, we in the portfolio, we own MARA as of this bar right here. So we bought on this bar. Initial stop loss was at 22. Almost got stopped out on this move back down. It held up, and then we got this big move yesterday and getting some confirmation. And we actually added into another, an additional miner today. It was WULF, this one here. A little bit of a lagger, but it's a $2 stock. It's been well over $100 a share at some point. It's very volatile, very extremely volatile. But take a little bit bigger position on some of these trend ideas as they're happening, and that's really what we're focused on. And those can last 6-8 weeks, and then maybe a little bit longer, and then they'll shift. We've seen AI and all things happening with AI and chips, and now we're seeing cryptocurrency kind of come back to life again. So instead of trading the cryptocurrency itself, there are other ways to do that. This is kind of like a derivative trade of cryptocurrency, of Bitcoin. It's like buying an oil miner, okay, an oil driller. When oil prices are going higher, mining stocks start to rally, start to move higher. Same story right here. These guys profit the more expensive cryptocurrencies become, because that's what they're doing. They're mining it, and they have all these computers running these computations on these nodes to close out a block on the blockchain. It takes computational power, and that's what all these companies are doing. Is they just have these massive databases of data centers, I should say, of computers, and they're running these computational processes. When they complete one, and it takes a lot of computational power, a lot of computers, then they get paid for that. So the more computational power and computers they have, the more they can mine and the more they will make. It's an interesting process, kind of odd in terms of, not odd compared, in terms of what the world is doing now. We're moving that direction, but it's fascinating nonetheless. So these are working right here. You don't necessarily have to understand it entirely, but understand the volatility more than anything else, because these are stocks that, you can see right here, just in the last few days, or in the last few weeks, months, up 100, down 100, up 100, down 50, up 100, down 50, really volatile. Those are, I think there's some good opportunity here for continuation of these stocks if Bitcoin continues to move higher. Those are some ideas that are currently working. Continuing to see things working in construction and home building. In fact, that is still the leading sector. We still have 70 new buys, and they're all the highest ranked, highest leading stocks as a sector are stocks having to do with building. FIX, which is a comfort systems, HVAC. You can see, with commercial HVAC, heating and air conditioning moving higher. Really, everything to do with building is, and even Toll Brothers, this is residential home builders continue to move higher. So they're again, they're anticipating people still need homes. They're still building them. They're anticipating interest rates going to stay the same or move lower. And again, they are moving. What I prefer to do is look what's working and look what's moving, and then maybe apply the thesis behind that. And again, I'm making up my thesis to say home builders are moving higher. That must mean that investors believe that interest rates are going to stay the same or lower. People got to have houses. They got to be buying. They've got, there's still growth. There's still anticipation for that growth, but I don't have to have an exact thesis to be able to jump on the trend and continue to ride it higher is really my point, is that a lot of these stocks don't go into the stock saying, okay, well, I wonder what their, debt to equity ratio looks like and their free cash flow and their operating and how many board meetings do they have a month and stuff like that. That's for somebody else to figure out. That's for an institutional investor to figure out and have all their Harvard guys in their noses and books and figuring that out and then buying the stock, telling their traders, saying, yep, sure enough, this thing's amazing, let's go buy it. We want to see that trend start to show up. And so that's our value of technical analysis, is we're looking for these momentum stocks. We're looking for stocks that are moving higher so that we can participate. This is one that I really, there's a couple of them that you have regrets that you don't jump in because they just keep moving. SMCI is one of them. It's finally kind of pulling back here a little bit. I've got my eye on this one here as well. I do think that SMCI could potentially go much, much higher here, but from 300 to 1,000, it's gone up 800% just in the last year, last 12 months. So really, really volatile stock, but a big player in AI. So that's the stock, that's the momentum. It's pausing, it's retracing. Let's keep an eye and watch, see if that creates some momentum going higher. If not this one, anything else in that new buy list, anything else in the muscle stock group, anything else in the new buy list here. Now, you can take that one step further. The reason why there are additional tabs here is to say, these are all different screens, okay? And say, maybe I only want, that one's giving me trouble for some reason. Let's see. I've got a few here that are doing that. Some of these are just different scans. Notice these are $2 and $3 stocks, penny stocks, more aggressive, okay? A lot lower price, potential more upside, but also for some additional volatility. Smooth sailing. These are just these are very similar to muscle stocks. They've got good solid uptrends in place, and these are the ones to be revolving and keeping your eye on, looking around. GTC, in fact, this actually, we got stopped out of this one on this ugly day. It got halted this day right here. Volatile, we got stopped out of it. It went all the way back down and then all the way back up. So there definitely some volatility happening in a lot of these names, but they're still working. They're continuing to work, and we want to try and really pinpoint those that are working the best and be a part of that and continue to let those trend higher. Now, in terms of the overall trend process, one of the things that we utilize here, and then I'll finish up, is when we're utilizing, let me just go back into the portfolio here and we'll look at, this new one today. Okay, ALR, we also bought this one today after this confirmation move. So what we want to focus on is we want to connect, I like to use this Fibonacci tool here. Okay, that connects this point, and I like to use primarily the 6-month time frame. Every chart is a daily chart. It's designed that way. It's designed to be a fixed system so that each bar, I can't say, oh, what does the 5-minute look like? What does the 1 week look like? What does the 1 month look like? I can't do it because there's no reason to. That's why this entire process is it's a system so that you can't change your mind, or you can't say, I wonder what the MACD is saying, or I wonder what stochastic is saying, or I wonder what moving average is saying. Oh, I wonder, because you could add 1,000 indicators and just, would any of them help? Probably not. If you're not using, you could put one indicator on and do just fine. Okay, so essentially it's what is the process that we're following, and then the levels that we want to utilize. We use this 236 once we're connected, 6-month time frame. This will automatically grab the time frame, the high and the low on that time frame, and then it gives us our natural steps. So this becomes now a natural location for some support. We have support here for a stop loss. So our initial stop loss was actually right down here below this bar because it was a pretty big day, 20% day yesterday. So I wanted to have the stop loss set here. So now, or wanted to have the stop loss set not all the way down here. That was a little bit too wide. So we went right here. So now we've got a day, we give it another day or maybe two, we might be able to start adjusting the stop loss higher. So we've got our direction, our direct, now we expect it to go higher. If it doesn't go higher, we have a stop loss in place so that if it moves lower, we're out. We move on, we look for the next one. If it moves higher, great, we manage it. Hopefully it turns into one of these. Come on. Okay, hopefully it turns into something like this. We're going to get some, we get these. They just happen because of the nature of the trend and the momentum strategy. But they're obviously not. They're fewer and farther between. But for it to move 16 to 30, that's just 100% move really from here to here. And 70, 80% move. That's also, that's fantastic. So we continue to trust that trend, and we can continue to let it continue to move higher, staying in that, adjusting the trailing stop, and exiting the ones that aren't working, keeping the ones that are continuing to work. And yes, it's been a great uptrend, and so our performance is going to be a little bit better during market conditions like this. They'll be a little bit flat. We obviously deal with drawdowns as well in bear markets, and but we can manage our risk effectively by holding on to a lot of cash, going smaller position sizes here. We don't have to go 2.5%. We could go down to 2%. So we can still do this exact same process. We can still own stocks, but we can manage our risk depending on what is our, for our risk tolerance and our comfort zone, and our account size. And we want to be consistent and steady in repetition and following a plan and following a system and doing it over and over. Sometimes it gets boring, but when it's working and we're making money, it's never that boring. It's we just have to manage our risk, manage the number of holdings, and continue to look for opportunities as the markets are giving them to us. And that's really the way we have to look at them is we just have to manage our risk, follow the new uptrends that are in place, and then the market does the rest, right? We had no control over this stock moving higher. There's absolutely nothing we could have done to be able to anticipate it, at least the way that we're investing in it. If I was an institution and I had a bunch of guys that were digging into everything, then I'd probably know. But in terms of momentum trading, then we're just following that trend. And every once in a while, you get one that just goes hog wild like this, and we'll take it. Those, that we need those. That really the system is designed to get those. And you can see, even just our current holdings right now, we've got some decent winners, and the losers are always small because if they get any bigger than 12, 15%, we stop out of them. Okay, and so we need some of these real big winners to offset multiple smaller losers. And so our winning percentage may be less than 50%, but we're going to get some real big winners, and that's really the value of this kind of method. Is we're going to be wrong quite often, but it's not that big of a deal because we stop out of them, keep the losers small, and then let the winners run. It really, if you were to kind of tie a mantra to this methodology, that's what we're focused on. So I'm actually going to end on that note. I sure appreciate everyone's time and effort, and we will see you next time. Thanks a lot. Bye now.